markets are exploding. Prices surging like a pressure valve suddenly blown open. And today, the spike became historic. Brent Crude, the global benchmark, surged to $119.50 a barrel. A dramatic leap after last week's 28% rally. In just 3 months, crude oil prices have doubled. In the United States, West Texas Intermediate jumped more than 30% in a single trading session. The reason? War, supply shocks, and one of the world's most critical energy arteries now under threat. The surge began when the US and Israeli strikes hit multiple Iranian oil depots, sending plumes of black smoke over Tehran. Those attacks were followed by Iranian strikes on energy infrastructure across the region. Refineries, storage facilities, shipping routes. The world's oil network suddenly under fire. Markets reacted instantly with prices erupting. This chart tells the story best. 3 months ago, Brent crude was hovering below $60 a barrel. Then the conflict erupted and prices climbed faster, higher until today's spike. Brent crude touching $119.50, just a few drops away from its all-time highs. The danger is now beyond just the Strait of Hormuz. Adding to the uncertainty, Iran has hardened its political stance. The country has named Mujtaba Khamenei, the son of Ayatollah Ali Khamenei, as its new supreme leader. It's a clear signal that hardliners remain firmly in control, and that the conflict could stretch far longer than markets hoped.
Target destroyed.
US President Donald Trump brushed off this price spike, calling higher oil prices a small price to pay for global safety, defending the aggression and claiming the prices will fall soon. But traders clearly disagree. The surge has already shaken global markets. Stock futures in the United States plunged. Asian markets suffered unprecedented tumbles. And economists are warning that if prices stay high, the world could face another wave of inflation and slower growth. For India, the world's third largest oil importer, the shock could be particularly painful. India imports more than 85% of its crude oil, which means every dollar rise in oil prices directly hits the economy. The price of the Indian crude basket, a mix of several imported crude varieties, has shot up in March. From around $68 a barrel in April last year to a low of $62 in December, the $99 level on Friday was before Monday's spike. Higher crude means more expensive petrol and diesel, pressure on the rupee, and rising inflation. And that's not all. There is also a rising spectre of shortages, all set to add fuel to the inflation fire. Indian oil companies have already seen their shares tumble as crude surged. The big question now, how long will this last? Analysts warn that if the war continues, oil supplies could remain disrupted for weeks or even months. Some forecasts even warn of a crude bomb, prices climbing to $150 or $200 a barrel if the squeeze continues. Bureau Report, Business Today TV.